stocks and put NVIDIA in there. And we know Jensen Huang now, I saw a report that he's traveling to go to China, was just at Mar-a-Lago, I believe. And we talked yesterday about all the whammies that NVIDIA faced. We talked about one in the morning and then one later in the day. I mean, Jensen Huang's had some week.
I know, and I'm feeling for him with shares under another day of pretty significant pressures. NVIDIA, I mean, really saw some pretty substantial selling yesterday as a result of the fact that they're expecting about a $5.5 billion hit here as a result of the ongoing right now battle with the trade and export controls. So I will say that I think that yesterday's move was a bit of a surprise, especially given the recent report that said the Trump administration had initially planned to back off its plans to restrict NVIDIA's H20 chips following that dinner with Jensen Huang at Mar-a-Lago. So NVIDIA now expecting to incur about $5.5 billion in charges in the first quarter from the latest curb. Also saying that per the U.S. government, which informed the company that it will be requiring this special license for those specific H20 chips. Notably, no license for GPU shipments into China have been granted, given the U.S. government's right now concerns that, of course, they'll be used for various national security threats. But I think that the conversation with NVIDIA is even simpler than that. I think right now there's a feeling of unease. And I mean, Dan Ives had a note earlier this week saying basically that we're in the eye of the storm, that right now in this Category 5 hurricane, that big tech, NVIDIA specifically, seeing definitely a feeling of it's going to be a long, drawn-out process between the U.S. and China for these various chips. So for that reason, I feel like there just isn't the same influx of positivity. I mean, buyers seemingly interested. I saw a really interesting conversation on X this morning that was basically like, hey, I want to buy NVIDIA eventually, but I want to wait until this is over. And so that's, I think, also leading to the continuous selling is just maybe a lack of buyers right now waiting for more clarity on what could be a months-long battle here.
As of April 16th, NVIDIA stock has risen an incredible 610% since the beginning of 2023, making it one of the hottest companies on the market over the previous 2 years. One factor is responsible for NVIDIA's remarkable success: artificial intelligence, AI. Since its graphic processing units, GPUs, are the standard for training AI models, NVIDIA is one of the key businesses driving the growth of AI, which has taken the globe by storm. For this reason, every investor in NVIDIA should monitor the company's data center earnings. Its development potential and dominance in AI are directly related. NVIDIA's biggest business sector at the moment is data center revenue, which comprises GPUs and other pertinent technology. According to official broadcaster CCTV, Huang met with Ren Hongbin, the head of the China Council for the Promotion of International Trade, and informed him that China is a very important market for NVIDIA. Less than a week has passed since the business said that it would incur a $5.5 billion charge in the first fiscal quarter for exporting its H20 artificial intelligence processors to China, which would require a U.S. government license going forward. Despite the fact that Barron's has pointed out that China was already a declining market for the company, the stock dropped by about 7% in the subsequent trading session. According to people familiar with the situation, Reuters reported on Monday that China's Huawei Technologies intends to begin shipping large quantities of its own 910C AI chip, which performs similarly to NVIDIA's older H100 chip, to Chinese consumers as early as next month. According to semiconductor specialists, China's emerging domestic artificial intelligence chip makers like Huawei stand to gain as the United States tightens restrictions on NVIDIA's sales to that nation. Last week, the Commerce Department announced that more AMD chips and NVIDIA's H20 graphics processing units, which were made to abide by earlier U.S. limitations, would now need export permits. According to NVIDIA, it has already stopped exporting the GPUs, which will result in a quarterly fee of about $5.5 billion. However, as Beijing continues to look for its own NVIDIA substitute, the loss of the American AI darling could benefit China's domestic AI chip companies, semiconductor analysts said in an interview. NVIDIA's rivals include a number of regional Chinese chip manufacturers, according to Brady Wang, associate director at Counterpoint Research. Tech giant Huawei and publicly traded, partially state-owned GPU design company Cambricon Technologies are two examples of these regional AI chip makers. In the last 5 trading days, Cambricon stock has increased by more than 10% as a result of the most recent NVIDIA controls. Over the last 12 months, the stock has increased by more than 400%. Wang stated that he anticipates a rise in demand for their GPUs and that these regional rivals now have more motivation and chance to develop and enhance their offerings. In China's quest to establish a rival to NVIDIA, analysts identified Huawei as the undisputed leader. According to reports, the most recent model in the U.S. blacklisted company's Ascend 910 GPU family is the Ascend 910C. Domestic substitutes like Huawei's Ascend series are becoming more popular as a result of restrictions on NVIDIA's H20 and other cutting-edge GPUs, according to Doug O'Loughlin, an industry analyst at independent semiconductor research firm SemiAnalysis. Although Huawei is still a generation behind in terms of semiconductors, the business is making waves with the hardware that employs them, according to a recent SemiAnalysis analysis. Hardware performance is rapidly catching up, even though there are still gaps in software maturity and ecosystem preparedness overall, O'Loughlin continued. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
There's no doubt there's plenty of money on the sidelines. They're just waiting what is the new normal, what to expect, what's the new range. I mean, when it drops below 100, people get excited thinking that's the buying opportunity, but you know, it's been sitting at 100 and dropping below 100 a lot lately. Rick, look at the technicals.
Yeah, I mean, a stock that all eyes seem to be on it as we deal with all this tariff-related news and the other factors that it's been roiling this very important stock in a very important sector. So we can see, though, for the most part, we have been traveling downward within the boundaries of this white channel here, starting with our highs 153.13, connecting these subsequent highs. What we did then, just duplicate it, put it across the lows, matched up decently. We did have a bit of an intraday fluctuation there, but it recovered quickly within these confines. We can also see, though, that we have a more sharp downward sloping trend line here in blue. It looked like perhaps price was pushing out to the upside. We broke beyond that trend line, but we did not really manage to crack our purple 252-day exponential moving average or this red line here, 113.37. This was a notable low point from here and here. So that was a couple of sources of resistance coming together. Price just wasn't quite able to hang on. Now we are back below that trend line and breaking through this green line here, which represents this old gap level here and these lows and these lows. So a key point to watch, 101.50, really could be a doorway to further downside here. If we were to look at our other studies here, we can see that that also lines up pretty closely with a volume node here around below, our old lows from August 5th line up with a volume node near 90.69 if we do slip below this key level that we're holding on to right now. But to the upside, everything's pretty much up here around 117, many technical indicators coming together and heavy volume.
Experts point out that export restrictions have also made it more difficult for China to manufacture cutting-edge GPUs on the same scale as NVIDIA, which does it through Taiwan's Semiconductor Manufacturing Company, the biggest contract chip manufacturer in the world. Although Huawei has demonstrated that it is a competitive fabless chip designer, the company struggles to get enough supply from its foundries, according to Morningstar Equities analyst Felix Lee, who specializes in semiconductors. TSMC has complied with U.S. trade prohibitions on Huawei and the export of cutting-edge semiconductors to China since its chip-making equipment incorporates U.S. technology. Chinese businesses are now more dependent on home foundries like Semiconductor Manufacturing International Corporation as a result of this. However, due to its own export restrictions, SMIC is unable to use some of the most cutting-edge chip-making machinery in the world. Given those circumstances, Lee stated that he is still highly doubtful that Chinese chip foundries will be able to provide enough H20 GPU substitutes to satisfy Chinese tech companies' demand in the near future. However, experts argue that because of inventories and past export exemptions and loopholes, Chinese chip makers won't have to meet this H20 demand right once. Chinese corporations ordered at least $16 billion worth of H20 server chips in the first 3 months of this year, according to a report published last month by The Information. When CNBC asked NVIDIA for comment, the company did not immediately reply. Although it's unknown how long various companies' current stocks will survive, Counterpoint's Wang claims that they provide Chinese chipmakers more time to increase the production of GPUs. I think the controls will have little effect in the near future. According to him, it will rely on how this local GPU development goes in the medium to long term. The semi-analysis research claims that Huawei's Ascend chip demonstrates how China's export restrictions have not prevented companies like Huawei from obtaining essential international tools and subcomponents required for sophisticated GPUs. Although the Ascend chip can be made at SMIC, the report stated that it is a worldwide chip with HBM from Korea, primary wafer production from TSMC, and tens of billions of dollars worth of wafer fabrication equipment from the US, Netherlands, and Japan. According to SemiAnalysis, SMIC's production capacity might increase significantly if it continues to have access to foreign tools, and there are insufficient restrictions and enforcement in place. The U.S. Department of Commerce is apparently looking into TSMC after a chip it produced for the SoftGo, a Chinese artificial intelligence processor, matched one in Huawei's Ascend 910B. Several semiconductor specialists have voiced skepticism that the most recent limitations on NVIDIA will accomplish their stated goal in light of news of export control workarounds and Huawei's GPU advancements. U.S. limits on GPUs and semiconductor manufacturing equipment have mostly harmed American companies, including NVIDIA, with no impact on Chinese companies' ability to develop advanced AI models, according to Paul Triolo, partner and senior vice president for China at DGA Group. Rather, he said, export restrictions have pushed the Chinese semiconductor sector to be more creative in its design of U.S. technology. NVIDIA might be subject to more export limitations next month under AI diffusion rules, which were initially put forth by the Biden administration. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Let's talk big picture here. So we had a lot of volatility last week. This feels like a little bit more normalcy now, or at least trying to kind of figure out how do we get back to normal. You pointed out that this is the first correction where seasoned pros seem more fearful than retail investors. I'm surprised to hear that, but how did you arrive at that assessment?
Yeah, well, incoming phone calls. I mean, I have peers in the business that were calling me in literally abject fear, and me kind of walking them off the ledge and saying, this too shall pass. You know, if you look at the data, retail investors have actually been buying in the hole on this correction, and hedge funds have had record selling in the hole. And what's interesting about that, most people would say, well, the dumb money, smart money. Let me tell you something. The retail investors have been right since COVID. They have been buying weakness while professionals have been selling weakness, and the retail investors have been correct. And I think this is going to be the case again.
But was some of that fear warranted? I'm not saying one should feed into fear, but like when we saw that volatility last week, obviously we've cooled since then on volatility. When we look at the VIX, it's not at those historic levels that we saw. But, you know, when you're in this daily, you've experienced that turbulence before, it does kind of triggers a memory that wasn't great.
That's right. That's right. Look, the administration has to learn to take yes for an answer. Okay, they have deals on the table, or as Kevin Hassett would say, bundles of deals on the table. And all they need, what you need to see is one credible deal roll across the tape, and then the market will realize there's some rationality in the administration. They're going to move ahead. Things are going to be okay. We're just in the period of uncertainty, and the way that you get through that is you focus on what you can control. And all you can control is buying high quality businesses when they're on sale. I learned very early in the business, good things happen to people who buy high quality assets when they're marked down. And you know, irrespective of how long it takes to get a deal, if it takes, so here's two analogs. Trump 1.0 in 2018, trade war. Market corrected 20%. It recovered V-shape within 4 months to new highs. Could that happen? That's a possibility. We're slightly more in the camp. It's going to be like the 2011 European debt crisis, where you had a 20% correction.
I remember that,
and then 3 months of hell, nonstop volatility, and then 8 months later you were at new highs.
Really quickly, I know you've got a couple of picks, but I want to ask you that point about volatility. Although we're not at that level that we saw last week, which reminded people, us included, of the GFC. Is volatility here to stay, or at least during this presidential term?
Yeah, well, the history of President Trump is volatility followed by upside resolution. And that's his formula. He knows how to push it to the edge and then break through and the market resolves higher. So I think you just have to, on a company by company basis, buy quality that you don't have to worry about, not speculative stocks. And we're going to find we'll wake up one morning and he says, I just spoke to my good friend Xi Jinping and the market's up 5,000 points.
I know, he does call him his good friend. I mean, it's an interesting characterization.
As of April 16th, NVIDIA's stock has risen an incredible 610% since the beginning of 2023, making it one of the hottest companies on the market over the previous 2 years. One factor is responsible for NVIDIA's remarkable success: artificial intelligence, AI. Since its graphic processing units, GPUs, are the standard for training AI models, NVIDIA is one of the key businesses driving the growth of AI, which has taken the globe by storm. For this reason, every investor in NVIDIA should monitor the company's data center earnings. Its development potential and dominance in AI are directly related. NVIDIA's biggest business sector at the moment is data center revenue, which comprises GPUs and other pertinent technology. NVIDIA's data center sales increased 93% year over year to $35.6 billion in the fourth quarter of its fiscal year 2025, accounting for 90% of overall revenue. Investors in NVIDIA shouldn't anticipate data revenue to continue rising at a rate of 90% plus per quarter, but any significant slowdowns in growth might be a warning sign that the market for AI infrastructure is contracting or that NVIDIA is losing ground to rivals like advanced micro devices. But since NVIDIA controls a large portion of the market, the former is probably the case. High investor expectations of AI-driven growth and sustained market domination in data centers form the basis of a large portion of NVIDIA's valuation. Investors may abandon the stock if there are any indications of a discernible drop in demand, making it much more volatile than it already is. Investors may determine if the AI boom is accelerating, plateauing, or waning by keeping an eye on NVIDIA's data center revenue. That might have an impact on NVIDIA's value proposition to investors in either scenario. During the 4-day trading week last week, when the stock market was closed for the Good Friday holiday, shares of NVIDIA, the top manufacturer of artificial intelligence AI processors, fell 8.5%. At the conclusion of the week, NVIDIA's stock was trading at $100.49 per share. For comparison, the tech-heavy NASDAQ Composite Index sank 2.6% last week, while the S&P 500 index fell 1.5%. For further background, Advanced Micro Devices, a rival of NVIDIA, had a 6.3% decline in share price. The S&P 500 fell by roughly 0.2% on Tuesday, while NVIDIA's stock increased by 1.3%. In a Monday announcement, the business said it was working with its manufacturing partners to design and build factories that, for the first time, will produce NVIDIA AI supercomputers entirely in the U.S. This news was well received by investors. Through collaborations with other businesses, it intends to build up to $500 billion in AI infrastructure in the United States in the next 4 years. In particular, NVIDIA has begun manufacturing its new Blackwell chips at the Phoenix, Arizona facilities of Taiwan Semiconductor Manufacturing Company. The biggest semiconductor contract manufacturer in the world is TSMC. It has long been the main chip manufacturing partner of NVIDIA. Additionally, for packaging and testing activities in the state, NVIDIA is collaborating with Amkor and SPIL. Furthermore, NVIDIA is constructing 2 supercomputer manufacturing facilities in Texas, one in Dallas with Wistron and another with Foxconn in Houston. Following the tech giant's Tuesday night disclosure via a filing with the U.S. Securities and Exchange Commission, SEC, that it plans to take charges of up to $5.5 billion on its fiscal first quarter results, NVIDIA's stock fell 6.9% on Wednesday. Mass production at both plants is expected to ramp up in the next 12 to 15 months. The U.S. government's prohibitions on exporting its H20 chip to China and a few other nations are the reason for the allegations. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
So if you're working from the bottom up, start with the NVIDIAs, start with the AMDs. If you do start to see a bid and a buying of the dip in those names, not hard to think logically that you could see a buying of the dip of the overall market. If you're starting from the index level, this is the NASDAQ day. So as the NASDAQ goes, likely the rest of the market will go today. It's the worst performer here in real time, but it has, at least stabilized from where it was overnight. It's down about 1.7% right now. And if you do see that, go from 1.7 to, let's say, 1.5 or 1.25, not hard to imagine that this S&P move might get a little bit better as well.
Understood. I mean, when you look at some of the levels, were you listening to Katie Stockton? She's always great taking a look at the levels, the highs, the lows, some of the momentum. What stood out to you? I mean, what levels are you watching?
Yeah, I went a little bit shorter term in the levels that I'm looking at here just to kind of set up today's trading. One of the things I've been talking about, Nicole, that I think is really important is that the realized volatility, or that's a fancy way of saying the actual movement we're seeing, has started to come down in the market, which I think is good for investor confidence. 8-10% moves on a daily basis is exhausting and, quite frankly, kind of scary for many investors. So the fact that this is a little bit, still outsized volatility, but something we've seen before, I think does bring a little bit more confidence back. I just looked at a chart of the S&P 500 futures since their Sunday open on Sunday night. Basically, just week to date would be another way to say this, where each candle represents a 2-hour time block. And basically just kind of laid out, 3 levels. One that I think is an important level initially this morning if you do see a little bit more weakness to the downside. And that would be the overnight lows of around 53.40. Now, keep in mind, again, I'm looking at the S&P 500 futures. So if we compare the difference in price, that's about 30 points higher than what that would be in the SPX. So for the SPX, think around 53.10, 5300 as a possible downside level to watch. That would correspond with that green line. I always like to do a traffic light. Nicole, is sort of, support being sort of your go zone, the red light being sort of your stop zone around resistance, and then the yellow sort of that neutral balance area. That neutral balance area is just over 5,400. Let's call these ranges. So around 5,400, 5,405 or so is that yellow light. And then the red light to the upside where we did see this rally stall this week around 5,460. But again, ranges when you're as volatile as the market's been. So that range may be from 5,450 up to 5,500 with that 5,460 sort of the midpoint of that range.
Yeah.